ask my fellow panelists to come up. Rekha Mehra, who's a Senior Associate on Gender and Development in Creative Associates International. Rekha, if you could come on up. And Petra Todd, who's a Professor of Economics at University of Pennsylvania. And they're both authors of reports for... Rekha is the author of the paper entitled Financial Services for Low-Income Women, Opportunities for Economic Empowerment, ? And Petra is the author of the chapter or the background report entitled How to Improve Women's Employability and Quality of Work in Developing and Transition Economies. So instead of doing presentations, this is to be a discussion. So just think of me as Oprah Winfrey, not as famous, perhaps not as gifted in interviewing techniques. So let me start with Petra. As the 2012 World Development Report on Gender noted, and there are several authors of that report in this room, women's labor force participation rates have been rising rapidly in the world. There was a 32-point gap in participation in 1980 that shrunk to 26 points by 2008. Latin America has had the most rapid progress. But participation gaps remain. So do wage gaps. Globally, women may earn as little as 20% of men, but never more than 80%. Perhaps the biggest issue that people associate with keeping women out of the labor force is the lack of child care. You reviewed the evidence on child care. Tell us a little bit about what you found and what you'd recommend to governments and to private sector about providing child care. And what about elder care?
Okay, so I did review a lot of different programs that were child care programs. Some of these studies were randomized studies, or lotteries that were essentially randomization where people wanted to have the child care, but not everybody could get it. And other studies are non-experimental studies where some people choose to take part in some program and then other people don't participate. But I found the results to be fairly robust across these different types of studies. And the child care programs were all over the world, but a lot of the programs that were studied were in Latin America, some of the very large programs, like in Colombia, they have a large program. And they took a few different forms. Sometimes it could be that like one mother became a child care provider and she took children in her home. And then a lot of times the programs provided nutrition for the children and enabled the mothers to go to work. And they were a work program for the women who are the child care providers. Or they could be central, like daycare centers that the government set up. Or the women could get vouchers to go to a private child care center. So there are a whole range of different types of programs. But consistently, where these programs were tried and studied, there was very high take-up of the programs. The women were very enthusiastic about them. They find all the time that mothers' labor supply increased, even in contexts where you might think that it wouldn't have increased so much. Like there was one study in Israel of Arab mothers who had very low labor supply rates, and then when they got free preschool, they ended up wanting to work, and their labor supply increased also. And I think one of the things about childcare programs in particular is that it's not only the mothers who benefit, that it's also potentially the children who benefit in terms of better nutrition and better child development. And that hasn't been studied enough. I think we need more evidence on how it affects the children. And then also older girls, because if the mother goes to work, sometimes she'll keep the older girl at home taking care of the kids. And so the childcare programs enable the older girls to go to school. So potentially like 3 different types of people, the mothers, the older girls, and the children can benefit from these programs.
Thank you very much. Let me turn to Rekha. A recent database, the Global Findex, the Global Financial Index, measures the use of financial services in 148 economies, about 97% of the world's population. They come to the not very surprising conclusion that access to modern financial services is lower in the developing countries and among women. In particular, in developing countries, women are 20% less likely than men to have an account at a formal financial institution. They're 17% less likely to have borrowed formally in the past year. But at the same time, women are the main clients of microfinance and informal savings schemes. You review in your background paper the empirical evidence on microcredit. You survey 31 evaluations, and you can come to the conclusion, which is a bit surprising to many, that microcredit alone doesn't stimulate growth in the businesses of poor women. Yet you also note that much of the available literature is anecdotal or subject to selection bias. So I've got two quick questions for you. How solid is the evidence of microcredit not having an effect on the growth of women's businesses? And second, if you think this evidence is suggestive, why is microcredit so popular among poor clients, and I hasten to add, among donors?
Okay, thanks. Andy may be Oprah Winfrey, but I'm not a star, so.
What did you do on that?
Okay, so but we did do the study, and some of my co-authors are here today too. So yes, we looked at a lot of studies, RCTs. We looked at other design studies. We looked at policy reports and so on. And yes, I would say, and actually the RCT studies, the ones that are the most, the ones that provide the most solid evidence, there are only 10 of them actually, because in fact, they've only been done within the past less than 10 years. Yes, the evidence from those studies anyway is pretty solid, that there's really you can't really say that there's much impact on micro businesses of poor women. And actually, I would say that's not terribly surprising. I mean, the amounts of money that poor women have access to is very limited. And interestingly, most of these women may not even want to grow their businesses. Most of them may be like in survival mode, essentially, and they're doing what they need. And then, of course, you heard from Myra earlier that for low-income women who may not have a whole bunch of other skills, being entrepreneurs may not be so they can get up to a certain level, but they need much more than credit and small amounts of it in order to be able to grow their businesses. However, that really is not the only value of microfinance. Certainly from the perspective of this particular study where we were looking at women's productivity and improvements in income, it was an important factor. But there are other factors to consider, and I think women have proven by demonstrating their demand for microfinance that in fact they find it valuable. And they find it valuable for a whole host of other reasons that may be important even to people like us. We want access to loans, we want access to savings, and they do for exactly the same reasons, and probably more so because they're subject to more risk. So having access to loans gives them some ability to manage their finances, to be able to manage their portfolios of money better, to be able to reduce their risk. And certainly, risk is a very, very critical element for poor women because they are liable to lose their assets should there be just one thing, such as an illness in the family or a death in the family in which they have to sell their assets. So it's very important to them, and they don't have social safety nets. So in that sense, it's very important to them to have access to microfinance, and that's why we see that 150 million poor women, 3 years ago at least, that was the statistic, were actually making loans, very low-income women.
Thank you, Rekha. Let me turn back to Petra. Your paper looks at active labor market policies that are put in place to either mitigate severe macro shocks or to improve the efficiency and functioning of labor markets. The most common are employment services, wage subsidies, training programs. I found it interesting that your survey finds positive effects of active labor market policies on employment rates for adult women. In fact, more positive impacts for adult women than for men, but not much impact on wages. And I was wondering if you could tell us a little bit about those findings and speculate, if you could, about why these active labor market policies are generating reasonable results in terms of employment, but not increases in wages? Does it mean they're not increasing productivity?
Yes, well, there's also literature in the US on these sorts of job training programs, and in the US, the evidence has been that they're largely ineffective. But then looking at the developing country literature in the transition economies, you find more positive effects of these programs. They take different forms, like you have some programs that are just job search assistance, other programs that are actually provide training or retraining services. Some give internships at firms, and then you have some programs that give vouchers, either to the worker, like to find a job, or directly to the firm in exchange for hiring a worker. So I think the way some of these programs operate is that they facilitate matches between the workers and the firms. And if you give a worker a voucher, you may lead them to accept a match at a firm that they might otherwise not accept, or the firm would hire a worker that they would otherwise not hire. And so therefore, the match will take place at a lower wage, you know? And so I think it's not that surprising that the wages are not really increased by voucher-type programs. In terms of training, I'm sure the idea is to increase workers' capacity, but I think it's unrealistic to think that like a 2 or 3 month training program is going to have a huge effect on workers' human capital, and that it's probably better to encourage women to stay in school longer in terms of getting a higher return than it is to just implement these training. But if you look at the different types of trainings, the programs that work best are the ones that link up with employers so that when the worker finishes the training, they actually have a job somewhere. You know, because otherwise you run the risk that these training program providers are just providing training because they're making money providing the training, but it's not actually training that's valued in the market. So to make sure it's valued, I think you have to focus on programs that link up with firms and have jobs for the trainees.
Thank you. Rekha, in your first answer, you were a little skeptical about the impact of microcredit on the variables of interest of this report. You also talk in your paper, you mentioned that microfinance institutions, that only a third of them offer both savings and credit vehicles. But for those third that offer both types of vehicles, the savings programs have been growing more rapidly than the credit programs. And so I guess the question would be, for very poor women, do you think savings programs are potentially more important than credit programs? And for what type of outcomes?
Okay, great question, obviously. It's very interesting that savings are growing so fast, or the demand for savings is growing so fast, because it's somewhat counterintuitive. Most people would tend to think, well, if people are so poor, then how come they want to save? When actually what we find is that they do want to save, and they save in various ways. And if they don't have access to formal savings products, they basically save informally under the mattress or whatever, which I'm sure you're all familiar with. But actually, savings are important, to different levels of women at different income groups. So in particular, they would be very important, say, for very poor women, for whom actually taking a loan may be a disadvantage in the sense that they have to worry about its repayment. And in fact, you'll probably hear more in the next panel about how you can actually, how very poor women can be helped, can be made credit-worthy. For them, it would be better, rather than to become more indebted, to actually be able to save. I think that would be more important to them. But I think what you're referring to is that there are some studies that actually show more, that show that in fact savings have a better outcome for investing in businesses for women. And that is true. But I'm sorry to say that there are only 3 such studies, and only 2 of them have actually focused on that particular issue. However, perhaps that falls into the category of promising, and it also falls into the category of how we absolutely need more research on this topic, and that it would be very useful to find out, just as these studies have shown, that in fact savings induce people to invest in their businesses and that their businesses grow. That would be very valuable information to have, and it would certainly be very valuable information to have to be able to then deliver products to women that would help them then save and make those investments.
I'd like to ask both of you a methodological question. And that is, as you talk, and this was, I think, the challenge that MIDA, the UN Foundation, and ExxonMobil put to you, was go out and find the most rigorous evidence you could find to support policy conclusions and robust, rigorous evidence. So I'd like to ask your views about the advantages and disadvantages of using randomized control trials in poor economies. Clearly, there are incredibly high costs involved in doing a randomized control trial well. Are there other disadvantages beyond the rigor? Are there other advantages of RCTs? Who'd like to start with that one? Petra, would you like to?
Okay. Clearly, in theory, randomized controlled trials would be ideal, because randomization is always considered kind of the gold standard, certainly in medical trials. But the reality, I think, in social experiments is that you can't control people as much as you could, like in a lab setting, and so a lot of times people don't fill out your survey, or training program providers feel sorry for somebody and they let in control group members, or they tell control groups about other programs that they could sign up for instead because they feel sorry for them, and a lot of treatment group people don't show up, or they come to the program for a little while and then they decide it's not what they expected. And so there's so many things that can happen that essentially you end up having to use some sort of methodologies to try and deal with the non-randomness induced by all these problems anyways. So I think for sure that we should pay a lot of attention to randomized controlled trials, but also recognizing that they have these drawbacks, and that we shouldn't dismiss the evidence from non-experimental studies, because I think that's a real danger, because I know there's even a lobby in Congress, that it lobbies very much for RCTs, and with the position that anything non-experimental is useless. And I think that's wrong, because the advantages of some non-experimental studies is they tend to have larger samples that can be more representative of the population that you're interested in, whereas randomized controlled trials often are pretty small samples, just a few villages or something. And so you have trade-offs that you have to weigh, and all of the different studies, I think, can be considered based on their merits and their deficiencies together.
Okay, so yes, I mean, I would tend to agree. Obviously, if we have randomized controlled trials, we are very happy with the results. They're robust, they're solid. But yes, there are many issues that have to do with, the things that you can't control in development, essentially, which has a whole host of things that, that we really cannot control. But specifically with respect to microfinance, I think it's very useful to use RCTs to look at to test specific products, to see what the demand may be or what the uptake may be, and so it could help greatly with the design of products. I think that would be a great application, say, for savings products and their take-up and so on. And of course, also with the impact. So far, most of the RCTs that were done on financial services, on credit, for example, on loans, have been fairly short-term. And it's not clear that the impacts on poverty that is so long-standing and so deep can actually be measured over the space of 1 year or 2 years. So in fact, that's another issue. And then, of course, there simply are not enough of them. And then if you consider the costs that go into it, to having to do them on, so that we can have some comparability, that that we could do them in many countries, in many locations, so that we can in fact have that comparability. That's a costly endeavor, and yes, and we have to weigh the costs and benefits of doing that.
So I think I have time for one more question, and I'm deciding whether to ask you the really embarrassing question or not. Does the audience have any preferences? Okay, so I'll go for the embarrassing question. And I admit this embarrassing question was planted by the organizers of this event, which goes something like this. have you read the roadmap report? Or at least, have you read the executive summary of the roadmap report? And if so, what struck you most or surprised you about the report? But there's a part two, which is a face-saving part two. And part two is, going forward, are there areas of research which you think deserve more attention than they received in the report which Maida outlined? And I guess another way of putting that last question is, did you wake up in the middle of the night thinking, gee, I really wish this had been in my chapter? Let's start with you, Petra, on this. Sorry for that.
No, I only read the executive summary so far. But now that I have this very beautiful copy that I got outside, I can see my train ride home will be full of good reading. I think it's very nice to see the summary from all the different research studies kind of concisely stated. And one of the things that surprised me was the results about some of the financial services, that just giving women money would not be as effective as giving them in-kind capital. I was surprised by that, and that the women needed to be induced to spend the money on their business sometimes, that they weren't by themselves spending it on the most productive use. And then I also thought it was interesting that electrification had a big benefit, which I would have expected, but it was nice to see that.
I sort of had the same reaction, because as economists, we're sort of brainwashed to think that unrestricted transfers are better than restricted transfers, right? Mm-hmm. So, Rekha, what surprised you? Or what kept you up at night worrying that you didn't include it in the report and you should have?
I can't say it kept me up at night, but there's a whole host of issues that deserve examining. So, and obviously I'm not going to go into a laundry list of them, but certainly, the whole question of mobile phones and how they could help women, certainly from the point of view of reducing the cost of doing financial transactions, for accessibility for poor women who are in rural areas. Part of the problem is the lack of mobility, whether it be by transportation or whether it be by social custom that women are not allowed to move out, or whatever the issue may be. Certainly bringing, mobile phones to them and for them to be able to use them, I think, and be able to bank through the mobile phone, I think is empowering. And of course, these studies also show that it's empowering for women, in rural areas to be able to get market information on their phones, men and women. But in this case, of course, because of the specific social considerations, that may impact more adversely on women, for them to have access to mobile telephony. And of course, we know that there is a huge gap in access to mobile phones between women and men. And so that's one of the areas that doesn't need necessarily to be researched, but simply to be invested in, and for us to know what it would take to get that accessibility to women. And I think one other issue that I'd like to bring up on the research side, beyond the question of mobile banking, is the question of looking at women's empowerment, in a sense, of women's agency, of their ability, essentially, to take action in their own behalf. We all, talk about this, and there are plenty of, sort of theoretical studies done on it, but actually to apply that to decision-making and to do that in multiple studies in a fairly consistent manner, so that we can actually compare how, having access to money, to income, and being able to control it makes a difference in their lives and makes them more empowered in that sense.
Thank you very much. Do we have time for some questions? So we've got about 10 minutes for questions from the audience. We'll take maybe 3 questions to start. I see a hand right there for number 1.
Thank you. I'm Allison Shapira. I teach public speaking and presentation skills with a focus on helping women around the world find their voice. And a lot of times I've found that when women speak up, it can be very dangerous for them to do so. And so I'm wondering if some of your research looking at economic empowerment looked at the dangers in different societies where empowering women economically or otherwise can be a physical threat.
Rekha, do you want to talk about violence in the context of microcredit? Or not, or something else?
Or not. I mean, yes, there are a couple of studies that do, that show that violence against women can increase, as they participate more in obtaining loans and going out. And in fact, the study I'm thinking of is very particular to Bangladesh. So yes, that certainly is a possibility, but obviously, I mean, that's one study, and there's anyway endemic violence throughout the world against women. So I'm not sure that one can take that as an example of why not to improve their access, why not to give women a voice. I mean, obviously, the goal should be rather to provide that accessibility, but also to think about what could be done to limit that kind of negative impact. I mean,
If I could just come in on the tail end of that with moderator's privilege, I think one of the most exciting tweaks on microcredit has happened in the context of South Africa with a program called Image, which explicitly tries to harness microcredit and adds a complementary intervention to address issues of violence against women. And it produced a 55% reduction of violence within 1 year vis-a-vis a control group. It was a randomized control trial, which showed no difference, where microcredit neither increased nor decreased violence against women. The IDB is now replicating this in Peru to see if we get similar results in a very, very different context. But clearly, in the more traditional society, when norms are challenged, violence can be one result. Let's take 2 more questions. 1 and 2, and then I think we need to finish.
I'm Harriet Stonehill, and I represent the Clearinghouse on Women's Issues in Washington, D.C. But in a previous job, I was involved with a program of having women be empowered in childcare and so on. And we found we needed to get the fathers involved. They really resented, this was an immigrant population in Israel, Moroccan women, and the fathers really did not want the mothers to go out and meet other mothers and so on. And so we had to do a lot of work with the fathers to get them on board that this was not threatening the family, this was not threatening their role. And so in this context of having people work as child care workers and so on, I wonder if that exists as an element in this kind of projection.
Yeah, there was only one study, which was a study in Israel that I looked at. I think it's true that you have to pay attention very much to the cultural context. And in some societies, women can't even, interact with others in the marketplace or something. And so the programs are going to work differently in different contexts, for sure. Most of the programs I looked at were in Latin America. The one in Israel was a big nationwide program, like free preschool for everybody, for I think age 3 and up. And so therefore, it wasn't that there was like some new program introduced for a certain population. It was, so maybe that was more acceptable, that it was universally available to everyone everywhere.
And lastly, quickly.
Thank you very much for the report. I was looking forward to seeing the results. My name is Henrietta Kolb. I'm the head of the IFC Gender Secretariat and previously worked for the Cherie Blair Foundation. And I just wanted to make one comment and then ask a question. The comment is that we worked with ExxonMobil on quite a lot of impact evaluation around mobile phones and the use on value-added services, both for women, in particular entrepreneurs. And there is a study coming out, hopefully in a couple of months. And I encourage you to read that, because we wanted to prove that obviously value-added services for women entrepreneurs in Nigeria, Indonesia, and Egypt can actually be of use and make a difference to their enterprise. And then the question goes, I was wondering in the evaluation studies, and I haven't had time to look at the website, did it matter who's the service provider of the different interventions? And my question is, obviously, if we want to scale and come to operationalizations of women's economic empowerment, private sector is key. And I just wondered if most of the interventions you looked at were sort of facilitated by the NGOs or bilateral aid or multilateral aid, or whether it was actually companies who looked at issues you've tackled. And and sort of what the difference is, if any, that would be great. Thank you.
Yeah, well, a lot of the programs were government programs, but they were all different. Some were NGOs. Probably the majority were more government programs or World Bank programs. I think it matters a lot who the provider is. And also, like, for example, a childcare program, if there was already a good private sector childcare market, you would not want to go in and suddenly start offering all these subsidized government-run childcare centers, you know, because you're going to affect the private market. So I think you have to pay attention to what's already available, and maybe in that context, vouchers would be more effective so that people could make use of the private options available. And then with training programs, I think there's the risk that the training program providers get all the resources and none of it goes actually to the people, and that they're just providing training that's not helpful. And so you have to be very conscious of the incentives that the providers have to give services that are actually worth something, you know, because the poor people getting the training don't really know necessarily what's best for them. So I think it does matter a lot, like who implements it.
Well, I think in microfinance, it's a huge range, obviously. I mean, certainly, and you know, there's a lot of NGOs, there are a lot of microfinance institutions that were created specifically for that purpose. And then there is a lot of interaction between the private sector and, you know, and banks. And the effort in many, well, as you know, some microfinance institutions morph into banks. And then there's also, you know, as in India, for example, the effort to bring commercial banks into the process, you know, so in a sense making, you know, low-income borrowers or savers or whatever creditworthy, or, you know, so that they can actually access banks. So I think that it's a good example, actually, of a partnership in a sense.
So we've come to the end. I'd like to thank Petra and Rekha both for their background papers and for their comments today. If I could ask for a round of applause for them.